There, Phil Rogers, Lauren Hall here from Loan Market Edge, coming to you with our weekly wrap. What is trending in lending? The fun continues. Here we are, March already. A quarter of the year is gone, which is very crazy. Exciting. I'm gonna have a real positive spin on that.
Yeah.
Super
well, that
exciting.
is your role in this.
Yeah, correct.
To be positive.
Good cop, bad cop. So a couple of things this week. Firstly, big shout out. We had the Better Business Awards this week in Brisbane. Our very own 𝘄𝗲𝗽 was up for Loan Administrator of the Year. Unfortunately, this year, no chocolates, but you're a winner in our eyes. And a big shout out to the Loan Market Group, I guess, as a whole, who absolutely cleaned up across the board. So really, always feel really proud to be part of such an amazing group and so many great brokers and businesses and support staff and corporate and everyone that makes it happen. So good to see everyone. I made a good decision and drove home and didn't drink. Well, not that I would normally drink and drive, but I didn't stay up there and drink.
Is that your story and you're sticking to it?
That's my, we're getting better at life, better life choices.
It's funny to see how things feel so back to normal. Aside from COVID, not being able to do those things, doing them on Zooms, and it's just a totally different experience to be able
in person. Very cool.
Everyone, there you go.
Very cool. Suited up, very fun. So yes, big shout out there. Rates again, another hot topic, does not stop, as we know. Interesting. Well, I don't know what's interesting. It's sort of.
To us, but maybe not to everyone else.
Wasn't great. This is probably where you should be talking about this. That the rate there was one of the banks in particular, rates are going up with the RBA, 9 consecutive increases. One of the majors came out this week and actually increased their rate by another 20 basis points, 0.20, 20 basis points, separate to everyone else. Yeah. Nobody else has done it. There's this trend of what's happened with fixed rates, and that's very much running their own race. But to see one of the lenders throw another 20 basis points on top of variable, I say just because they can, not great, not happy. Please explain. And I don't know if that's setting a trend. The good thing was no one sort of followed. So let's hope that's a little bit of a one-off. Yeah. Unfortunately, going into this week probably says that RBA rates are tipped to go again, another 0.25%. But here's hoping that's the last for a little bit. So for homeowners, investors, everyone that's got a loan, let's hope, fingers crossed, that this is the last one we see. And then, maybe they hold tight for April and May. That's my tip. Economist, Phil, Dr. Phil, that's my tip. You heard it here first. When that's exactly what happens, you'll know why.
Well, I need a disclaimer at the end of this.
Yeah, potentially. I'm not an economist by any means. Fixed rates on the move. I will let you talk.
Thanks.
Yeah, cool. Just for a bit. Just for a bit.
That's enough. Fixed rates moved again. Fixed rates moved again with a few of the big boys and a few of the smaller guys as well. So definitely sitting sort of 5.99 into the sixes space as well. Interesting how quickly those will change. So, announcement is made and effective immediately. So if you are contemplating fixing, and you're looking at that, obviously talk to us first before you do that, but it is a decision you want to make fairly quickly because those rates can change.
And they're very independent of each other. Yeah, very, very independent. People go, what's the trend, or who's going to move? Someone has a really great 2-year rate, then another lender is, a terrible 2-year rate, but has a great 4-year rate, 3-year rate. I was 1 year. So it's hard sometimes when you're talking to just your bank. You are only getting just your bank's appetite, I guess, at the time, and they might have the killer 2-year rate, but you want 4 years, and so that balance is really important.
That also just made me think of something else there as well, is when these variable rates, when the RBA makes their announcement and then the banks announce their variable rate increases as well, they all implement that or put that into effect at different times through the month. So when we're comparing lenders as well, we've got to make sure, because some of them move sooner, some of them move later, that you are doing a true comparison and not looking at, but that bank's cheaper, but they actually haven't passed on the increase, which they're about to do on Friday.
Especially with Dr. Google, right? You jump on and go, hey, why? Wow, these guys have it. So let's take everything there, where I guess from our side, we can sort of help guide you through that. And we're very aware of when they last
the dates as to when they start to move, and obviously conscious of that with pre-approvals as well, when that's going to change borrowing capacity.
Just a side note, maybe they're helping the people at home, the difference of maybe why we would fix, I guess, versus variable. So if you want to give maybe Yeah, well, just you can talk fixed. I'll talk variable.
Okay.
No,
So
why would someone fix?
So fixed,
Lauren, why would someone fix?
All right, here we go. Interview me. So fixed is around stability. So customers that I'm talking to that are looking at fixing are concerned about interest rates increasing. We're talking around stability, so wanting to understand what their repayments are going to be for a certain period of time. At the moment, you are paying a bit of a premium to fix because fixed rates are higher. So it is definitely a discussion we want to have around, if there were a few more variable rate increases, I'm not doing your bit, how comfortable are we with that, and do we want to look at fixing? Okay, so it's all built around stability, depending on what other things are happening. If we want money to invest in businesses or side hustles or other expenses or other things that are coming up in your life, will help us understand whether we want the stability of a fixed rate or the flexibility of a variable rate.
Yes, and I guess, in that, I guess, pros and cons as well. So having that peace of mind, knowing that that repayment isn't going to change for that chosen period. But I guess one of the disadvantages to fixed and trying to understand the difference where variable comes in.
It's more restrictive.
Yeah, restrictive,
so
how much you
get your
can
stability, but then you're more restricted around, making additional repayments, having access to redraw.
Can't have an offset account with most facilities.
Correct. Yeah. So, and also, again, wanting to understand what your goals and plans are. If we're looking at selling property, if we're looking to buy other property, we may need to refinance, just going through what the restrictions and the terms and conditions are of a fixed rate. So that's why it's always good to get that advice around that and understand what's the difference between the two, what's going to be better for you, so we can help guide you through that.
And short, medium, and long-term goals, right? And nothing against walking into a branch. We have great relationships with branches, but we're here for life. This is a relationship. It's a long-term goal, and understanding, 1, 3, 5, 10-year plans are very different. And I guess we start with you first and the bank last, right? So that is a big discussion. It's not just the flashing rate. Yeah. So it's understanding, why would I fix? And then maybe why wouldn't I fix? And why would I look at variable? And that is the flexibility of additional repayments. That is the flexibility to be able to, we talked about before about restructuring. If we've got money in an offset, if we've got money in redraw, if there is additional funds, if we want to be able to have access to those funds during that period. So I guess the disadvantage then on that same variable position, unlike a fixed, is it will go up and down. And you will ride that emotional roller coaster, I guess, at the moment a little bit. For what that feels like. Now, again, the peace of mind of going, cool, I paid a premium for that peace of mind to fix, or the variable goes, well, look, I'm in a position where I could probably handle that if it moved up and down, because I actually want to make accelerated repayments, or I have 50,000 sitting in additional funds that I want in redraw or offset. I don't want to pay interest on that. So there's lots of strategies where a variable would work really well for a client or clients, likewise for a fixed. So it's not an open-ended. There's not a right or wrong in that discussion. But for us, again, short, medium, and long term, that can often change. And you might start with variable. Fixing is only a phone call away.
Correct.
It's very easy to do.
Or the good old split loan, which is really common, which is a little bit of both.
Yeah, some variable. So I thought that might be really relevant, because at the moment people are thinking about that and going, oh, should I fix? Yeah, because that is I don't know what that was all about. It's very aggressive. Should I fix? It's a big question. Yeah, correct. That is a big question. We do get that a lot. Should I fix? Well, you sort of go, well, asking the person beside you at a barbecue might not necessarily give you the outcome you need, because it's really specific to your personal goals and objectives in your situation at the time. And again, I talk about short, medium, and long-term goals. They are very different for most people, right? And understanding these next 12 months look very different to potentially the next 2 or 3 years. Let's hope. Will rates go up, down? What's that going to look like? So it's probably one of the more enjoyable discussions we have with clients, trying to really do a fact find and go on that discovery with them to find those things out before we would even recommend either of those options. So, if that's something you maybe thought about, or it is a common discussion, get in touch with us. We'd love to talk to yourself or others to help with that, because it is really important, and more than happy to guide you through it.
Absolutely.
So there you go. Another Saturday in the office. Enjoy your weekend, and look forward to talking next week. Bye for now.
Bye.
Bye.